You've all been seeing the WeWork IPO and how that's been going. They were at what, a 47 billion valuation?
Originally, yes.
And now down to 25. And everybody's been talking about how it affects the company and the investors. I brought George in to talk about how it affects the commercial real estate. Everybody, thank you for tuning in. We're shooting our weekly YouTube video for my YouTube channel. We're doing something a little bit different today, and we're going live on Instagram as well. So I brought George Pino. George, thank you for coming in. George is the CEO of Commercial Brokers International in Los Angeles. You've all been seeing the WeWork IPO and how that's been going. They were at what, a 47 billion valuation?
Originally, yes.
And now down to 25. And everybody's been talking about how it affects the company and the investors. I brought George in to talk about how it affects the commercial real estate tenants and landlords. So, George, you want to talk a little bit about your company, yourself, your market?
Absolutely. Company's been around for about 15 years now. We are in the Los Angeles submarket. We specialize in different aspects of commercial real estate, from office leasing to sales. So we have a pretty good insight with investments and as well as the leasing side, what that may affect, how that may affect, and how they do affect one another back and forth. Myself, I've been in the business for about 30 years and growing, or I should say lucky enough to be in the business for 30 years, and been able to see a couple of downturns in the markets and experience those as well as the upturns.
30 years, yeah, you've seen. Yeah. You've seen a lot. You've
Quite a few.
A few downturns.
Quite a few.
Now this WeWork, great company, going through some changes right now, some real growth issues. How do you see, let's say they pull back on the IPO, which I guess I read just before we came in here is a good possibility. How do you see WeWork, if it doesn't go, if they don't get any more funding, it doesn't make it, how's it going to affect the Los Angeles, actually nationwide? I don't know if you can speak to nationwide, but how's it going to affect the commercial real estate industry in Los Angeles?
Well, I think there's a couple of things that we want to look at here. Number one is that with WeWork, how's it going to affect them as a company first and foremost? I think landlords are going to look at it and reevaluate the creditworthiness, perhaps, and look for better securitization of the leases, because they're such long-term leases that when you have a company that hasn't made any money and the valuations are coming lower and lower, and the only reason they would probably not go out as an IPO is that they don't feel they can make those numbers at that $25 billion mark. And for instance, one of their largest competitors that has, WeWork last year posted about a $1.8 billion in revenue, but a $1.7 billion loss.
Right.
So a lot of that loss was attributed to a lot of the building of the spaces out and the build-outs, because it's quite expensive. But at the same time, one of their largest competitors, International Workplace Group, they posted about a $3 billion worldwide revenues, and they have been profitable. Okay. So their valuations, because they're publicly traded, are about $4.7 billion. So, when you look at revenues, profitability, and where they stand, it's hard to substantiate a $25 billion valuation for WeWork. So I think if they pull back, what's going to end up happening is landlords, and for future, are going to look at the creditworthiness of the company and then require more securitization, which could then impact their growth. That may have an impact on their bottom line, the profitability, and which case then what happens with the company, how they can restructure, is going to be a big question in the future for a lot of people.
Sure, I can imagine. How many square feet does WeWork have leased in the Los Angeles market?
They have about 1.8 million square feet, which sounds like a lot.
Well,
it is a lot.
It is a lot.
It's a huge. It's a huge
amount. Picture,
but in the big picture of things, it's only about it's less than 0.5%. And the Los Angeles market right now is experiencing all-time lows for vacancy rates. It can definitely it's going to impact the absorption rates, but at the same time, it's not going to have a huge negative impact on the market itself. Now, the buildings they're in, though, are going to be hit a little bit harder because they tend to take a larger footprint within the buildings. Some buildings, they're upwards of 50+% of the tenancy. You know, other buildings are down to 10, 15%. Let's say 20% on average. Because they take such large footprints. They take the entire floors or multiple floors within a building.
Right.
And, you know, if they went dark, or let's say they weren't able to restructure and they had to go under, it poses a big risk for the landlords because the space is so unique to their type of use. Their competitors are already saturated in the market. It's not like someone else is going to step in and take over those spaces. They're going to have to be rebuilt and built out again.
Yeah.
So there's a lot of cost to the landlords to do that, as well as time and energy and effort to actually come in and take that place. So the landlords themselves, I think, the individual landlords are potentially.
Don't you think if the IPO doesn't go well, the landlords that they're talking to now might want a higher rate? Or how they're going to securitize that lease? Well,
the leases that they have are already in place.
But for going into
new places, I think that you're going to end up seeing landlords wanting a higher security, some sort of security.
There's more risk.
Perhaps you know, even a letter of credit may not be enough. You're looking at long-term leases with build-outs that are unique for that specific use, so essentially are worthless to the landlord. So in addition to that, landlords have traditionally been given a lot of concessions for those build-outs and to get WeWork in place. I think those concessions are going to get smaller, so they're going to end up driving costs and expenses up for WeWork.
Therefore, they're going to pass it on to the new tenant base.
They're going to try to, but then they have to worry about their competitors. You know, you have the other companies out there that are spaces, well, their competitors, there's quite a few people in this market as far as the shared workplace market. You know, WeWork has been touting themselves as a community-driven concept, which is fantastic and great. I think it's a double-edged sword. I've actually had clients that had funded startups. They were in WeWork. They walked in. They literally looked at the work environment and said, "No, we're getting an office space now because we're wasting 20% of our day talking to other people." And they thought that was very inefficient, so they moved them out. Others, though, that collaboration can be really good and really good for the companies, especially in the creative or tech industry.
Sure.
So, you know, it's a double-edged sword.
Yeah. Now WeWork, I just picture it with startups, but I'm assuming they probably have some corporate clientele as well.
Absolutely. They have some of the largest corporate clients out there. You know, you have IBM. Well, there's some very large companies, and there's numerous reasons that companies would want to go into a WeWork type of situation. Number one of which is going to be the flexibility. You know, the fact that they can grow quickly or contract quickly if they need to. You know, their liabilities
downscale.
Month to month. So it could also potentially, depending on how the company books their leases on, you know, it could affect, you know, what they call contingent liabilities. So the liabilities of the company for a lease, you know, right now, for instance, WeWork with the $47 billion evaluation actually has liabilities of $50 billion just in leases. So they've signed leases worth $50 billion.
Right.
So, you know, when you book that as a company, you know, a large company going month to month doesn't have to book a 5-year, 10-year lease term.
Right.
So it does have some appeal to larger companies as well. So it's not just the startups.
Yeah, it'd be an easy opportunity. You can go upscale or
absolutely
be a way to go. All right, so if you're a office landlord, how do you feel about working with a company like WeWork right now? You think it's a good situation to put yourself in, or you think you can securitize it enough to?
That's a tough,
$1 million question, right?
That's a tough question, and you know, ultimately, I think that it's all about risk versus reward, just like any investment. So if you can, depending on how you can securitize it, you know, perhaps with a good letter of credit, but that then ties up a lot of the equity that WeWork has the ability to utilize, so they probably don't want to do that as much. Or if you can get a better rental rate, which will also then impact how they do their business. So it's a really tough moving question. I think that for the future, if I had WeWork as a tenant, or considering a tenancy, if it is a large portion of the building, I'd be a little worried.
Yeah.
And I would really want to protect my interest there.
You'd be watching
If it's
this
a
IPO.
If it's a
Pretty
smaller, yeah, absolutely.
Yeah.
But if it's a smaller chunk,
Right.
it's then, you know, if it's a smaller chunk of the building, you know, let's say it's 5% or 10%,
Right.
and it's vacant space that needs to be taken out, you know, that it's your last space, it's probably worth that risk at that point. You know, you're looking at it. This is typically, we're looking in a sub-market that is right now about a 9.9% vacancy rate in
Right.
Los Angeles as a whole. Class A in some of the areas that they're in are substantially lower, but you know, it's a healthy market is typically about a 10 to 12% vacancy rate. So you know, anybody taking that space up that you would
Right.
typically have as vacant is just boot. So
Right.
you know, at that point, it's a potentially a possible risk. You know, I would be concerned more about. Well, even if they do make the IPO, it's going to be interesting to see what happens with the company because they still need a turn of profit.
Yeah. What if, now this is something that was asked this morning, what if I'm a tenant and, you know, WeWorks really starts to struggle? I guess I just pack up and move, right? Or what if they declare bankruptcy? How's that going to affect me as a tenant?
You know, as a tenant, on the tenant side, for some of the larger tenants, it's going to affect them, make it a little bit more difficult because commercial tends to move slower,
Yeah.
and there aren't large chunks. You know, there's some tenants at WeWork that have hundreds of employees,
Right.
literally in the space.
Right.
It's hard to find that you know, that would typically be a office space that's 10,000 plus square feet.
Oh, yeah.
You know, it's if you're looking at that. Well, probably close to 15 or 20 even.
Yeah.
You know, that could take a year to actually find, build out, and move into.
Right.
So it can impact them quite a bit. I think the smaller tenants, it's a lot easier for them to move,
Sure.
jump into other co-working spaces or shared office space or
Right.
month-to-month sublet type space. There's quite a few of those out there. They always have some sort of availability. The market's been, in this type of market's been there as far as not so much the community-driven co-working space, but the co-working space of subletting, so to speak, has been around since the 50s.
Right.
And you know, a lot of companies have come and gone. Almost every company has at one point had financial difficulties
Yeah, I've
because
heard
of
that almost
downturn in the markets.
almost
Yeah.
every one of them that was in this space has at some point had they really struggled. So
Absolutely.
I guess WeWork is doing
Absolutely.
it now. But well, it's as anxious to see how this IPO works out. We wish the best to WeWork. Fingers crossed for you guys. George, thank you very much for coming in. Again, George is the CEO of Commercial Brokers International in Los Angeles. Reach out to him at any time, and thank you for tuning in.
Thank you.